Well, I hope you have your affairs in order because this sucker is coming down faster than the Titanic. Currently, it is split in two, and they are bailing it out as fast as they can. Currently, $550 billion just got drained. And another bank down, and another bank down. Guess what? And another bank down. And another one bites the dust, and another one. It just was flowing perfectly. Also, Skylar, if you could, let's go ahead and try to front run. Thank you. You knew what I was going to ask you to take down. Let's go ahead and front run the audience, because I'm sure down in the description, right? If you can find it, congratulations. The comments, it'll either be something about Mary or this was a terrible time to stop sniffing glue. Or let me get the quote right. Hold on. Looks like I picked the wrong week to stop sniffing glue. I do have a cheat sheet off to the side, but we have the entire yield curve. This we have never seen. Well, we have, but you're not going to like what's going to come next. The entire yield curve is now under the Federal Reserve's Fed fund rate, if I got that correct. So for all of you with big cojones and you're like, oh, my wife's calling. And now cue the fire, just got off the phone call. You know, when you get in an argument, you just like everything just goes out the window. What were we talking about? Your cojones? Now is the time. If you guys, for all of you, right, that were like, once the Fed pivots, I'm all in. Well, here you go. Bravo, the Fed hasn't said they've officially, okay, I've been telling you this for years. The Fed follows the 2-year yield. That thing has collapsed faster than, well, I was going to make a prostitute joke, but we're going to leave that one to the side. It's collapsed. It's on its knees. But cue the fire for a second time. The Fed and Treasury have a new tool. I guess their old tools aren't working, so they got to create new tools. This one is called, let me get it correct, MILF. No, MILF. That was the last tool they used. The new one is BTFP. Why don't we just change it to like BF me? Because, you know, at the end of the day, whatever happens, they're just creating bonds, right? And they're passing it on to you. They are going to lie all the way to the bank, kind of like CS and all these banks. It's just, oh, we're strong, we're fine here, nothing to see. Go look over there. Also, we're gonna look at where the money comes from. I'm breaking down all the macro that really you should care less about, because it's almost like, you know, the Ponzi, and it's not a Ponzi, it's that table game, right? Where you got the ball and you got the 3 cups and the guy's moving it around and he's like, pick which cup, and you're like, you clearly knew it was in the right. And that one, they lift it, it is, and then you get double, and then you get double your money, and then right, and then you're like, oh, I got it wrong. But even when you rewind the tape, you could see that it was under that hole, or under that cup, but the cup has a hole under it, and it dropped down. And then once you figure that out, it drops to another table, and it's the same game again. So please, for all of you, my macro friends, it's all the same shenanigans with new tools. Those are just new tables. But at the end of the day, it's just the debt-based bond market. They create it, they flip it to a balance sheet. I will go into it. And then the people say, the Fed's printing money. The Fed can't legally print money. They don't, but the media will tell you, the Fed will tell you, but it's just them yapping their jowls. Trust me, they're lying to you. And for those of you that are like, well, oh wait, so I'll believe him on that one, but not on that one. You got to figure out which lie do you want to believe? It's all lies. JPM as bank runs. Ooh, can't say that word anymore on YouTube. As bank run. So he says it twice. It's all right. I'm already shadow banned. Drains $550 billion. Also, can you subscribe? Because somehow you found me that it's not supposed to exist on YouTube. So congratulations. I must have snuck through a little hole. Billions? 550 billion. You know how much money that is? Okay, you just take our FX reserves, you know, how we used to have an oil reserve for emergencies, and then Biden drained it all the way down to basically your kitchen sink. Well, now we have these things, FX reserves, which I'll show you, but I think we're lower than Uzbekistan. So that is why I say Is your house in order? Because it's going. It just doesn't go all at once. But the market went up today, bravo. The market didn't crash. It doesn't. It goes like a domino, one after another, and they're like, oh, we got it all under control. We'll start a new BF me. It's okay. You see, we got this. $500 billion in deposits in 1 week. And it's gone. It's all gone. Now we have QT essentially over. It's not essentially over, but it's kind of over. It's the bond market once again. The Fed just doesn't have to raise its federal funds rate, which next week, 1/4 point. We'll see if that one's on the table, idiots. Well, along with SVB, right? Silicon Valley Bank. They're gone. Reserves are gone. Such a mismanagement, a 5-year-old. Guys, you should balance your portfolio. They weren't very balanced. Bank reserves, as low as they are going to go, drying up, well, everything for loans, because that's what the banking system is just loans, and you cannot see that, so I need to Casper myself. There it is, circled in red with a yellow arrow, and those are your little banks. No reserves, easily taken out. So we can just consolidate into big banks, and then after the big banks, then we can have CBDC, and that's kind of their plan, which was July, but I've heard they're moving it up. Because you know what they always say, never let total destruction go to waste. Because in the end, which I have been calling this, check 1, check 2, check 3, you're like, when CBDC? I'm like, well, allow like a banking crisis. How do you create one? Drain the liquidity, drain the reserves, and you're going to get one. Well, right on target. So now in come CBDC, where you have complete control over nothing and they control you. But you're going to be happy. Trust me. And everyone's going to love it because they're going to go, look at this. Mickey, just download an app and the money goes right into your account. It's real. Not only are banks, once again, they're reserved constraint, but small banks are especially desperate for reserves. Well, maybe they should have done the right thing in the first place. So when I take my money and I put it into the bank, you do the right thing with it. They will never do the right thing because they are banksters, and psychopaths always have to win the game. They always need to make more money. If you ever ask them how much is enough, they'll just say more. But to conclude the article, and then we'll hit the Fed balance sheet, 2009 banking crisis for the small banks, if only in the beginning, because once the small banks go down, the big banks won't be far behind. Correct. And also understanding the mismanagement of funds. I mean, they all mismanage funds. The banks, they do one of 3 things. One, they buy bonds. Okay? That's what they do. The only problem is the entire bond market is upside down. So they're all underwater. So that's why those unrealized losses, well, some of them are having to click the sell button and get out. Now it's real. So it went from unrealized to, wow, this is completely realized. Now, something that you have seen is this Fed balance sheet above my head. It was starting to, right? They're letting the bonds, the treasuries start to mature, roll off. The money goes back over there to Janet. She blows it on, big parties or whatever she does over there at the treasury. But you're seeing a slight uptick. Oh my gosh. What could that be coming from? And no, that's not Fed Go Burr, which you kind of see it right there, right? So you're wondering what that is. It's not, here's 1 year. I'm on the wrong side. Sorry. Let's go 6 months. I'm still, dang it, move to the other side, Bravo. It's that right there. So you want to know what that is. Well, it's that BF me thing. And let me just get the correct pronunciation right. It's FT. See, I even screwed it up. I'm literally looking at it. My brain. BTFP. I will never get that right. I like mine better. I just think it has a sweet ring to it. Offering loans up to, so here it all is. This is, again, it's just where's the ball? Is it under this one? Oh, nope, it's under this one. So we got the Treasury, and it's so small. With approval of Janet, she's going to approve everything. Of the Treasury, the Department of Treasury will make available up to $25 billion. Oh my gosh, where are you going to get that from there, Janet? From the Exchange Stabilization Fund. Like, it's all these new words, and it's also the FX market. So I will get back to, I know banks go under here. This was SVB Financial goes bankrupt. Didn't see that one coming. Let me give you 100 more. More on to how this is all created. And if you get confused, there's a rewind button, right? I know normally maybe you guys try. I don't know. For those of you that can watch me 2x speed, whoo-hoo, congratulations. View United States FX, foreign exchange reserves from 1961 to 1923. Woo! A whopping 37 billion. That's amazing. But we just drained what? How much did they take? Come over here to my cheat sheet, 25 billion. So now subtract 25 billion from 30, we'll say 35 billion, because I'm terrible in math. That gives us only 10 billion. Boy, we're doing great. Oh, by the way, when I'm scrolling down, Japan and China have a hell of a lot more than us. Just warning shots fired, broken oil, broken money. I mean, we're up here with like, what is this? Oh, South Korea beat us? Kazakhstan. All right, we're right in line with Kazakhstan and Uzbekistan. So basically every dude with the name of Stan. So stand behind Stan, because we're about right there. And actually, Eminem put out a pretty good song about Stan, probably, unless you're Stan. Oh, by the way, Stan died. It was his fault. For those of you that know the song, you maybe giggled. But I wanted to mention China. They have 3.184 trillion in reserves. So good job, China, in being responsible. So they have 3.133 trillion. We essentially have zero. Thank goodness, as Biden would say, but we have our economy as strong as hell. And also, let me move over a little. My black thing always gets in the way. Right, gentlemen? Always the problem on this channel. It's like right here, right in my mouth. What you guys need to look at too is the M2 money stock. Okay, that's money. Okay, you want to see something really strong? Look at that. That would be a good, average. Anything below that, not even an average. That's horrible. You don't ever want to drop below that. Like in the 70s. Remember, everything bad happened. Then over here in the 80s, everything bad happened. Well, look at that one. That's we're all not going to make it. So again, coming back to liquidity's being drained, is gone. Oil, money, everything. Make sure your house is in order. And let me change the chart even a little bit so you can see what happens right there when Fed the Fed go burr, right? Well, the Treasury go burr. Lots of bonds. Everyone want bonds. Give it to the people. Went through the roof. Now we're through the floorboard. Oh, and just in case you want to know how to fix it, it's the same thing that they did over there. Just do it again. And if you want to benefit from it, that would be TLT. Well, that's because it's the bond market, things like this. But bravo, the market went up today. Well, today it didn't. Right? Again, do not look at stonks, crypto, nothing. Well, oil, you get a good read on the economy, but do not look at stocks to say the economy's great, everything is fine, the stock market went up. That is not a very good indicator. Also, since I did mention Bitcoin, I've been saying if it's under 20, feel free to accumulate. Or on any big pullback, okay? It could come down around, this was a big pump. I'd have to do a whole crypto channel on that, but I mentioned TLT, so I'll show you. Not just that, I'm going to show you how to trade this. Oh, congratulations, TLT. You're above the 200-day moving average. Let's go Bulls. Well, first we had to suffer the most gigantic bear attack. That was from a Head and Shoulders move back there that I must have been horrifically drunk when I put in the buy rather than short. Thanks, Steve. Followed that all the way down. Hits price target, goes below price target. Now this is an inflation deflation play. We're going to be deflation. This is all disinflationary. And if the Fed slaps on another 25 points next week, well, there's going to be some problems. But on this trade, and here we go, finally, I'm going to recoup my losses. You move this, and I've had this up for a very long time. But the possibilities, because everything's probabilities, on this price, 14%. We're not talking crypto here or like shorting banking stocks. Just paper trading here. I'll do it for you. We made a killing. Also, link in the description for my bear market watch list. This is what I trade. This is what I'm trading. Hey, if you're so smart, you would have called SIVB. Well, I did. I actually documented on February 17th, and I showed you where to put in your paper trading short to make a hell of a lot of money. On that one, it went from $301, although I think when they halted it, I think we're 80, 70, something like that. It's not moving. Game's over, so get to collect all the digits now. Thank you. Also, if you are interested in learning how to make your digits go higher, start here. You see, Dominate Stock Swing Trading, $1,000. But I will give you 60% off. Start there. And then you could do a watch list. That would be bull market watch list down there. Then once you figure this all out, you go to the bear market money. That's in a bear market. Or you could, whatever you want, then you could do the watch list. 70% off. Wait, shoot, I just said 60% off. I cannot. I am having a struggle raising prices. And I even paused the video to go 60% off, 60%. And then I said it. And then my brain's like, 70% off. Okay, today's it. Grab it. Learn how to do this. Watch. Here, TLT. This triangle, okay? And then you measure it. See, from here to here, 1, 2, 3 touches, 1, 2, 3, 4 touches. It breaks. You're above the 200. Let me zoom in so you can see exactly what I can see. Sorry, and I don't mean to push the. It's not like, oh, you're pushing the debt market. No, I'm not. I'm just making your digits go in that direction rather than in that direction. And also, I need to know because it got rejected. Look at this. 1, 2, 3, 4 times. Please don't get rejected today because then it's really bad. Let me go into candles and see. Oh my gosh. It's like, that's what I love about trading. You guys got to do it. If you guys like video games, if you like sports, does he get home? Oh, look at that. Oh my goodness. Yes, I'm going to call him safe. He's safe, right? That's over. That's over the blue line. Here, I'll even zoom in more. That's the 200 daily moving average. We're here. We're above it. I would like to see this full candle. Come on, one more day. So let me turn on one more thing. TD sequential. You know, it goes up to, I call it my 9 count. It goes to 9 and then it sells off. So if you ever want to learn how to, are we going to sell off? There's a couple indicators. It's in my bear market course. It's even in my swing trading course. You turn it on, you're like, okay, we're at a 1. So let's go. Because a lot of people are going to make a hell of a lot of money starting now, and people are going to lose a lot of money. That's just how it is. When the market, and don't I warn you? Do I show you how to do this? Please tell me what I'm setting down you're picking up. I know might not be right on the exact day, but come on. When the guy calls the top of that Silicon Bank, right? See, gentlemen, you had your eyes on Silicon. They popped. Banks borrow $164 billion from Fed. Where are you getting that one from? It's all from you, just to let you know. It all starts over there, either in the bond market or in Fugazi in the banks where they create debt out of thin air. Which one do you want? You want debt or bondage? That's the bond market. They borrow $164 billion from Fed in rush to backstop liquidity. Guys, it's all going. I don't care what new tools they create. At the end of the day, your taxes go in that direction. They're systematically going to make sure all the little banks go bye-bye, and it's all the big ones that they can control. Those are the ones that go to the meetings and they buy the bonds and all the Fugazi stuff. So do me a favor, don't believe anything that these guys say, even Bill. I have so much to say, and I'm not going to say it. Did you guys ever catch him crying on TV when okay. I'm sure it's from his heart, right? Billionaire investor. Isn't a millionaire enough, Bill? You had to go to the billion. Billionaire investor Bill Ackman says U.S. banks depositing $30 billion into First Republic creates a, quote, false sense of confidence. Okay, Bill, I will agree with you on that one. But then the question is, why are you saying it? And how much money are you going to make from this? Oh, just to fact check myself, this is not the first time Bill Ackman may have cried in public in front of hundreds of investors. He's crying because of the American dream, because billions is just not enough. I want trillions. And then he's buying on one end, shorting on the other, shorting on one end, buying on the other. It's how you get up to the B word, right? Billions. Consume, but that's not you. No, you feel like you go to work, you have to work 40 hours and then 80 hours, and you're not too happy right now. Nope. Consumer, send me a mint, also known as sentiment, falls for first time in 4 months. I was wondering when that one's going to roll. Well, congratulations, it rolled. And that was before Americans knew about SVB, consumer sentiment. Then I screwed up from 67 to 63. And at that point, they're like, wait, what's this? What's going on in the bank? So if you think that's bad now, okay, you wait. We're coming on down. I can't imagine everyone's gonna be pointing fingers everywhere. I know Yellen got she was cornered. They're like, okay, so what about all the communist China, all the people that they had their money? Are you gonna increase the taxes on us and pay the Chinese? And it's like, can we move on to the next question, please? Treasury Secretary Yellen says not all uninsured deposits will be protected in the future bank failures. Just the ones that you find on the WEF, World Economic Place, those all get protected. Yours, not so much. But here's the quote that just scares me, because when she says, I will never see another financial collapse in my lifetime. Welcome to the second one. Our banking system remains sound. Not. And Americans can feel confident that their deposits will be there when they need them, Yellen said. Let me just cue a little fire on that. That is untrue. Your deposits aren't there. It's already been loaned. You put this stuff, right? Sheets of paper that says "In God We Trust" into the bank, poof, it's loaned out. It's gone. It ends up on the Fed's balance sheet, or it ends up in a repo market. You want to know what real money is? You hold it like this. I know you can hold paper, but this is real. Oh, you see silver? Woo! Or how about gold? I mean, in these all things, you could have looked at the charts and you would have said, which Ninja called me. He's like, why is silver pumping? I'm like, it's that much above the 200-day moving average. And believe it or not, the 200-day moving average could save your life. The things that I teach in those videos that you have either not purchased or you're hoping you could get it all free on YouTube, which I highly doubt it. Because as you know, it's extremely complicated and it changes. Charts don't change though. Charts remain the same. And the charts don't lie, and they can always predict what the news is going to be and the future is going to be. Before I forget, because I kind of did. So here, I'll show you. Going back to this. How I was saying the Fed funds rate, that's that orange line. The whole yield curve is inverted and it's never crashed so hard since forever. I mean, today, 8% down just on the 2-year. Look, here's 3 month. You should have locked in those 5+%. You should have. You were like, I'm going to wait a little bit more. 6 month. That was a 3 month. Here's the 6 month. We're under it. The 1 year, we're really under it. The 10-year, we're way under it. We're way under it. The 30-year, you don't even see the Fed funds rate. 30 years bouncing on the 200-day moving average. It's going to cross that. The 10-year, you're under it. That's that blue line right there. You're under it. And this is what the Fed follows. That's the Fed funds rate, which you are clearly under the 200-day. Let's do this bear market interest rate thingy, also known as the Fed pivots. Do me a favor, invest in yourself just a little bit, especially you went to college. Come on. It's like a textbook. But thank you guys so much for hanging out to the very end. I love you. And I will see you tomorrow, even though I don't even have to be tomorrow. What is tomorrow? Saturday? It's the weekend. And the crowd goes wild. You've probably been drinking all week. Yeah, just keep going. Why stop now? See you tomorrow.